Welcome back to another video. This is going to be more of a macro time frame perspective. Everything I'm talking about today would be based on the higher time frames and applying QT to it. So it's only going to be charts. I'm not going to use any form of fundamentals to talk about it like I always do. And let's get started. So over here we have three triads of the indices, and dropping lower into the weekly time frame, we would be able to see that we have SMT on the candle bodies. So this is hidden SMT, and it is a sequential SMT because this high, body high, was made in Q4 of the last quarter, and then this is January's open. Okay, and then we formed a higher high on Nasdaq, lower high on ES, lower high on Dow Jones. All right, and then we have this huge expansion right now. The month of April opens up this particular candle within this candle here. Okay, so if we were to just take the 3 months candles, I think that would be easier to segregate. And then we have one more down here. And then we have, I'm going to put in the next one. Okay. And then we drop down into the daily time frame. Alright, so sorry, the weekly time frame first. So over here we have Q1 expansion after forming SSMT. Okay, so this is pretty much confirmed at April's open, which is this week. Markets continued to sell off as expected because we do have a expansion Q1. Okay, now what do we expect in Q2? If market is going to be fair, it's going to be nice, it's going to provide us with consolidation and then after that retracement. But if the market wants to play difficult, give us a challenging in terms of nightmare difficulty, then Q2 is going to continue to expand lower following Q1's price action. Alright, now my idea is very simple. Okay, we look for OTEs to form the lower high. All right, the high which is going to provide you with the quickest and the maximum expansion of this entire move right here. So notice how we did not have a retracement into premium yet. So what I'm expecting is some form of OTE to form, like an OTE retracement to form. Of course, if it continues to expand lower, then obviously we do not anticipate OTE, but what we can anticipate is a lower time frame SMT to follow through, to hop on to the right that Q1 has presented to us. So this is going to be the game plan for the rest of the year until something changes. Okay, this is why Q1 is very important because it sets the stage for the entire year. Right. Now jumping higher into the 3 months time frame, or should I say the yearly time frame. Okay, let me just remove all the drawings here. Notice how we are taking out Q2 slow after Q2, even though Q2 was a expansion. What are the probability of us trading higher right now? It's almost close to zero. Okay, because if Q3 is to trade higher into Q4 before having some form of crash, we should not be taking out Q2 slow. Okay, because Q2 is not a consolidation profile. Keep in mind, Q2 is a expansion profile. All right, so right now we're taking out the expansion profiles low. What lows are we looking at right now for the next draw on liquidity? That is going to be Q1's low. Okay, so I can assume right now at this point in time, Q1 is expansion, Q2 is expansion, and then Q3 we have, what do we have? We have reversal. So what do we expect in Q4? It is going to continue the trend of Q3 taking out Q1's low. So until Q1's low is taken out, I do not really think that we are going to trade higher anymore. So the bullish thesis or the bullish narrative, everything is off the table at this point in time, right? It is perfectly fine that we did not catch this initial run lower. The reason is because the initial run lower is just a prequel. There is a thing called the second leg lower. ICT taught this as well in his market maker models. Alright, and he likes to trade the second leg lower because they are faster and they provide you with the, how do you call it? The maximum expansion below consolidations, which is the terminus of the move. Okay, so what do we expect heading into 2026 at this point in time? Sorry, 2027 at this point in time. Okay, we are thinking that 2026 next year is going to provide the move down into the lows here. Okay, so Q3 might be, in terms of the year itself, 2025, we might just see a run very deep into this order block, and then we find some consolidation, build some base right here, and then in Q4 we trade higher somewhere inside this range, and then we drop. So the real crash, I think, is going to happen next year, not this year. Okay, and it doesn't mean that we are looking to buy along the markets in the long term, even though we can foresee some form of retracements higher before the real move takes place. We are only looking for shorts because we stick to the higher time frame narrative. Okay, and this is very well in line with the expectations that we have in terms of the yearly cycles, or should I say the 4-year cycles. I forgot the name for that, but Trader Day has a name for that. So notice how the year 2025 is exactly 80 years after 1945. So you can assume that the generation that has went through the previous world event has pretty much passed on, majority of them, and right now we are in a generation that has not experienced WAR. So because of this, the likelihood of us experiencing it again is very high, because history repeats itself. If you study history long enough, you know that there is this recurring pattern that always repeats itself. Because logically speaking, no one is long enough to live through all these generations, like centuries. No one is old enough to do that, or no one is capable enough to do that. And because of such a limit or cap that we have, we cannot really utilize the experience unless we read or we educate ourselves on what has happened in the past. So because of this, things tends to repeat itself. All right, and if you take a read up, or if you go read up on what has happened during 1930 leading up into 1940, 42, 43, right now is the start of that particular building of the environment. Okay, like setting up the stage for that huge event to take place. So everything is falling in line with what ICT has been expecting and what Trader Day has been expecting as well. And I'm not trying to say that you can 100% lean on to what they're about to say, but you can utilize the charts to verify if that is indeed going to happen. And right now we have the very first red flag pointing up. Hello, we're here. We are telling you something is going to happen. You better prepare yourself for it, because we're going to make a huge move, and let's see if we can capitalize on this. Okay, so this is what the market is telling me right now. Okay, now what happens after huge events takes place? If you read back into the history, we start a generational market up movement. All right, so moving forward, this is what we are going to play with in terms of the game plan. Right, I understand that this is going to be a very long horizon play, a very long, how would I say, higher time frame maneuver, but this is going to be very easy for those that are buying at the lows that are going to form next, the lows that are going to form on the yearly candles in terms of market structure, not the yearly highs and lows, but in terms of the yearly market structure, we are going to see the next low form. Okay, so if you take a look at the previous candles right here, this is what I meant, the market structure lows, and then look at what happened. Right, so we can prepare ourselves for that, and in order to do that, we have to build capital, which is what I'm trying to do right now. Build up some capital, and when we form the lows, we go all in, because because we will know where the lows is going to form due to SMT, just like how we know that the high is formed utilizing the weekly candles over here. Okay, which led to this move right here. Even though we did not, as I'm repeating myself, even though we did not capitalize the entirety of this move right here, it's okay, because we can always wait for the next opportunity to give us, because that next opportunity right here is going to be the last bars to take us down into this lows right here. All right, so just study back how the previous crashes have always happened. There is always some form of next bus, or should I say, there's always a second opportunity that presents itself. So one is right here, look at the move after that. And then in terms of the huge crashes like this, hold on a minute. Just give me a minute. Okay, where was I? Yeah, there is always a second opportunity for you to capitalize on shorts on both sides of the market, basically, but in terms of the expansions. So over here we have the weekly candle as well for the crash of 2008. Look at how we have this retracement right here before the major real move starts, the second leg of manipulation, of distribution. And right here as well, Dow Jones probably can't see anything, but for Nasdaq and ES right here, this huge move lower, and then this leg or this retracement higher, and then we drop. Look at the SMT right here, the body SMT. All right, so don't worry. right now what you need to be focused on is to just capitalize on the lower time frames, because right now the higher time frames is untradeable in terms of it's not going to give you any positions anytime soon. You have to wait for several weeks or even a few months, because the key thing I'm looking for is SMT on the quarterly highs. If not, SMT on the 15 minutes, I mean not 15 minutes, but the 15-day highs. So if we divide the 3 months candle into 4 quarters, we're going to have 15 days. Okay, so 15 days, and this 15 days is going to be one quarter, I mean Q1 of the 3 months candle, right? The quarterly divider for the 3 months candle. So over here you can clearly see that we have SMT over here against Dow Jones, and then we have this move lower, and then subsequently we have the continued expansion lower. I think it is possible for price to just leave this low for here right now, and then we retrace higher, leading everybody to think that okay, the low is in, we're going in and we're going to chase the price higher into all-time highs. That could be the case, right? I'm not going to rule out the probability, but I'm going to stick to the higher time frame bias that I have, which is bearish. So any form of retracements is going to be a short for me based on our game plan itself. Okay, until price proves us otherwise, then I'm willing to be wrong. Okay, best case scenario, they give us the SMT above April's opening price. So if we take a look at the other charts that I have the macro chart right here. I have marked the April's opening price right here. So notice how we have this fair value gap, we have this volume imbalance as well, we have to count it in. So if we have some form of SMT right here, best case scenario is up here, but if we have it right here, or if the market's really weak, then we're going to have it right down here. Any form of SMT, as long as it is sequential, it is valid. And I'm only looking for bearish prices. Okay, and that's going to be it for this video. Hope you like this session here. If you have any questions, do leave them in the comment section down below. But if you can make it to the live streams that I'm going to have during the day, I mean during the weekdays, that would be better, because your answers can be your questions can be answered immediately. All right, I'm probably going to do like an afternoon live stream for like about 1 or 2 hours during the London session if you have any questions. And yeah, I think that's going to be it. I'll talk to you again. I'll talk to you when I see you again. And good luck trading. Have fun. Next week is going to be really interesting to watch, because we do have CPI on Thursday. And I'm going to give you the weekly forecast. Let me think about it. Okay, let's take a look at the weekly candles for now to see if there's anything I can comment about. If not, I'm not going to give any form of weekly forecast right now. Okay, maybe there's something. All right, so yep, thanks for watching and have a great weekend.